So let's look at West Texas Intermediate, US oil. Despite the choppy and slow movement, SAVFS Hub, we want to apply market structure strategy to see if we can find anything about any information about US oil. That is what we want to see. So we are looking for opportunity for buy or sell for US oil, or possibly tell a story about where oil is headed. And the first thing we'll look at is our floor on our roof. The floor on our roof gives us a clear idea as to where price is going. And we'll see a brief story about oil price. Oil fell by 2000 by the year 2000, oil dropped to 0.79. That was the lowest oil has been, in recent time. Oil dropped massively. So we like to take note of this level also as a potential future buy level. Oil price can still return to this level technically. So we must also keep this in mind that some of the OPEC decisions could likely lead to oversupply, which will definitely bring about low price. So we'll continue to see what is the strategic petroleum reserve factors. Strategic petroleum reserve is very important in the sense that it affects oil price due to its role in balancing demand and supply. It's very important. SPR, always watch out for SPR level. It brings a lot of market effect, long term speculation, long term stability, market sentiment, and it buffers supply and demand. So we'll continue to watch it and see what OPEC does with its inventory and quota system. So we also continue to watch share production for US side to see how this can affect oil price. So at the moment, oil has been on benchmark 60-65, and we'll look out from the structure to see if there is any opportunity that oil could be heading for a breakout. I believe that oil is about to drop. I believe that oil price will drop based on demand, based on inflation. Inflations are really not accumulating much. So I think on the long run, oil price will dip. Let's see if this structure is correct. See, price of the market is well calibrated. See, so when we talk of calibration in the financial market, it's well calibrated. Every price in the market follows a trend angle. The way we go from the floor to the roof. It's marvelous. Where we see pricing, the break of structure, break out of supply roof from the weakest, creating a demand flow, price into market, price into market, price into liquidity hunt. So in that liquidity hunt, it's also traceable to another break of structure. But let's leave that for now. So try and keep my chart as clean as possible. On a monthly, we want to see how the SPR level and the OPEC inventory data will likely push oil price up. And why oil has remained at 60-65 dollar benchmark. What is the possibility of the breakout? Here we have a descending trend line for oil and a possible breakout from the stock to where oil price has rallied. And we can see that actively how oil price has get that breakout from a descending trend line. So we also look at that structure to see what oil has done monthly, and we can see it that oil broke out from the descending trend line, indicating that oil might go. On the contrary, geopolitical tension, SPR data, inventory data, supply and demand, they're all playing against upswing of US oil. So let's see what's going on here. We have here as our supply roof, against our supply roof, against our supply roof, breakout of the supply roof, price returns one, price updated roof, where institutional traders went short on oil. So let's take a look at that. Now oil is being in a very bad place. It's dangerous right now to trade oil. The reason is because oil is not moving. The price of oil has been steady. Oil price is consolidating. And one of the worst things you want to do is to be in a consolidating market. It makes no sense. Look at here, you see price of oil moving. We understand it's a bearish move. Price updated the floor. Oil price started moving. When you updated another high, consolidated to a while, started selling again. Now oil price has been consolidating. But let's find out the strategy and look at here. We have another structure at this level where we have a clean break of structure. We have another clean break of structure at this level. Very clean on a monthly time frame. Clean break of structure. Very clean, clean and evident. Let's change the color to blue. So we have here the demand floor, break of the demand floor and a possible retest to a supply roof. And this within the zone of retest, break of the supply roof, price returns here on the one, break of the demand floor on supply. So technically oil is in supply phase. So on technical, we have oil in supply phase. So what does that mean? That oil price might continue to drop after price of hitting the roof. Price updated the roof and oil sold for 130.47. So we must also take note of that height. We must take note of that height. That oil updated 128.70 per barrel of oil. So we must take note of that level and we continue to watch. And then the lowest oil has been is this is how Xavi FS Hub approach the market. So it's applicable to anything in the financial market. We look for the floor, we look for the roof. Now we have an idea. The lowest oil has been 0.63 and the highest is 128.70 on a monthly time frame. So we see oil now, oil is technically in the supply phase after the break of structure, but another way is you have a breakout from a descending trend line. So technically you have a mixed feeling. You have a mixed feeling. So because we believe in the structure of markets, so we interpret price based on price movement. So we have two conflicting data. We have a breakout where we have a way of resistance structure, breakout, possible retest and oil price of swing. So the next thing we want to see here is to see all the data where we have invalidation. Everywhere we have invalidation. Then let's look again from a monthly time frame. We broke out from an ascending trend line. The breakout from an ascending trend line quickly cause the retest. This is our ascending trend line where price has kept a strong bullish phase and then suddenly price broke out from the structure. And they broke out from that structure, got a retest. So it's a whole monthly data where we see price. We have here demand flow, demand flow, demand flow, breakout of the demand flow, price retested and oil is selling. And when oil tries to swing, we have the data here and another data structure. So oil is sell bound. Oil price might continue to drop. But we will look at it and know what's keeping price. Apart from the strategic petroleum reserve data and OPEC quota system and inventory data reports, we will look at this structurally to see what is keeping oil. And from there, we will now know and make our final verdict where oil is headed. So let's look at from a horizontal perspective. If we find another bit of structure, we have a structure here, we have here supply roof, and we have here break of the supply roof of the retest. So we have found a structure at this level. Ladies and gentlemen, this is the reason oil has kept on and head on for a very long time. This is the structure of monthly and after oil price. I want to change the color to red because it's critical. Just because it's critical, we change the color to red. And this is why oil price has held steadily since 2015. July, we had a price action by way of a supply roof and break of the supply roof price returns retest, break of the demand floor price returns supply, retest 1, retest 2, retest 3, break of the supply roof, return price and demand. So oil faces a very strong demand floor. demand flow starts from 62, 63, 60 into 65. So on technical, for us to look for a drop in oil where we look at the potential retest of breakout from the descending trend line, oil has to break out from the $65 benchmark. So last time we made a post on oil which lacks three technical details, but our insight and over a period of time looking at strategy enabled us to improve accurately and look from fundamental perspective surrounding every tech market and bring it into pair with the structure. So what we see here is that we want to see structural breakout from here, and oil has built a strong demand floor. And see here after price breakout, the price retested a supply roof, retested a supply roof, retested a supply roof, break of the supply roof, price returns on demand, price returns again on demand, and price is playing on demand. So for every time price touches this level is a buy. So what we want to see is that oil break out from this structure. Before you breaks out from this structure, it will be a good time to see that oil is selling. Then let's look at another structure here. We have another structure at this level where I will want to see what oil has done. So we have a structure at this level, and when we look at this structure, we find that oil has broken from the structure. So this also says that oil might likely go down because structure never lies. So when we look at the structure of oil, monthly time frame, now what I see is that the oil has broken from the structure. What structure was broken? And let's look at the structure that was broken. See if we draw evidence, use it as a guide or as a litmus test to see if there is a new fallout in price. Now from here we see we're on a monthly time frame and we have a support structure created. Monthly structure created here, we return to a monthly structure. Break of a monthly structure, price starting to liquidity area where we have a strong rejection, or you had this lowest level at 0.63. That bullish impetus has broken the structure, came down to the test it after breaking the structure. And price returns again on demand in the month of June 2023, upswing return again in the month of um, January 2024, and ultimately broke the structure in September. So let's be specific, get the month where oil broke out the structure. So oil broke out in September, in the month of September 2024. And you can see that every time price tries to breach this line, let's change the color to black. This is how we trade market structure. No indicator. It makes you understand the market from demand and supply perspective. It gives you long-term stability in the market. It makes your speculation alright, and also shows you what market sentiment is saying. So, as we look at market sentiment, we also look at supply buffer. You know, so structure is everything. Structure is everything. To be honest, structure is everything. So you see, after price breakout from the black ascending structure, you can see what has happened here, and we have a lot of evidence. We broke out from an ascending trend line, and let us also see if there is a possibility for breakout on a monthly time frame. Price is trading below the descending trend, connecting the previous high on a monthly time frame. Structure has not broken. The last time price touched the black, let's change the color to purple. So see, the last time price touched the purple descending trend and end up in sell. So now you see the monthly candle now trying to identify. The question now is, will it break out from the black ascending trend line? A breakout from the black ascending trend line is an indication that the breakout we have here is seeing liquidity, seeing more demand for oil. Where oil in the light will trace up again into 100 levels. This is possible. This is another window open for oil buyers. Now we look at it again on the flip side, that if the structure manages to break out from the red demand floor holding price, then what we see here that will happen is that we will be guided by descending trend line where we will test and oil price may look at $22 per barrel. The fallout from this zone is going to see oil fall dramatically. This is what monthly structure is saying. This is what monthly structure is saying. So please come to the comment section if you have any objecting view. If you disagree with my analysis, feel free, challenge me in the open, challenge me in the open. I don't entertain private chats. Come up openly, say your mind. I'm going to defend myself because we understand the structure of markets. So if you have an objective view, if you disagree with what you say, come up openly. Don't send me a private DM. Come openly and challenge, and I will defend myself. Okay, this is what we see on monthly time frame of oil. This is one of the most advanced structures I've seen for oil. And using our multi-time frame analysis to analyze the market, I think I will remain on monthly time frame for oil. I don't want to trade oil on weekly. I don't want to trade oil on daily. I don't want intradays. Monthly is the best because now you can see what's going on monthly. We have a breakout. Look at the breakout here. Supply roof, supply roof, supply roof. Breakout retest. Oil might likely come down here to retest a broken descending trend line. We have already broken off from ascending trend line and from a descending trend line again purple. It has been guiding price. So every time price touches the structure, it respects it for sell. Every time you see price come here, sold here, price sold here, price sold here, price sold off. So what we see now, what's holding oil at 60.65, it's not just only sentiment, it's not strategic petroleum reserve. The structure of the market is also playing. So it's also telling us the sentiment of the market that markets are waiting a breakout to the downside, meaning that buyers are not ready to add, they are not ready to go higher. Nobody is willing to buy oil at a high price. No country wants to do that. The structure is saying that no country is interested in buying oil at high price. So this is why you see oil is been consolidating within this range. So what we might likely see is a possible breakout from this structure. On a monthly candle, if you have a monthly bearish candle breakout from this structure, then oil will retest and continue to sell down. I won't sell this before oil. Oil is likely. So this becomes a buying floor or a demand floor for oil buyers based on structure. You can see the structure. Let's change the color so that it makes a whole lot of sense for us. And when we look at it in the future, we continue to let's change the color to let's see purple. Purple is okay. Let's change it to red. Red is okay. Let's keep it red. So this is what we see that for this price has been held actively by let's cycle them. So you see this cycle, go replica it. This is the reason oil price has not dropped. But I can tell you, if oil breaks out from this structure, expect oil to sell because this is a monthly time frame analysis. So for those who trade oil, US oil, UK oil, make out time to look at the structure. We do not use indicator, I shall be here for some indicators are intoxicating. We never use indicators. We rely on the structure of the markets. We look at demand and supply. We look at fundamental analysis. Like for oil, we have looked at strategic petroleum reserve. We have looked at OPEC quota, and you can draw information at oil.com where you look at oil information, which we've done all those research indoor, and we are believing that the oil price might continue to drop. There is a very big setup for oil price to drop. So if oil, we don't know how long oil is going to stay on this balance. But if oil breaks out from this structure, then it's going to be time to go short on US oil, UK oil. So this is what we see. So this is the foundation buying has been happening. Um, at this level, oil buyers are enjoying every time price comes to this level, price comes to this level. So there's nothing you can do. You want to see a breakout from the structure, a breakout from the structure, especially on a monthly time frame, we expose oil for more bearish days. Besides, we also have a bearish trend already set up by price, where we have by way of the descending trend line. Again, another strong descending trend line for oil, where we see price by way of weeks. So let's look at it. So you can see that structure, descending trend line holding price actively. Price might still return to the test again with a potential buy opportunity. So this is how we choose to view oil. Please, if you have a different view, feel free to challenge us in the comment section. Feel free to challenge us in the comment section. Feel free. It's a free speech. We never delete our trade, whether we are right or wrong. Feel free to tell us we are right. Feel free to tell us we are wrong. It's up to you. Your freedom of speech, freedom of right. Say whatever you want to say. Okay, this is how you choose to see oil, and we will remain oil on monthly. If you want to trade oil on monthly, and like if you want to be smart,